Alright. I just hope it's not when we are recording that everything start happening. So, for those who joined from the beginning, right? I'm gonna take this off. I'm not sure if the first recording I posted it because it's quite disturbing, right? So you understand, like everything I've been saying is that everything you see here, you see it on social media, you see it everywhere. It's an entry model, right? It's an entry model. So it is one thing to really understand the entry model, it's another thing to really subject the entry model to what the overall direction of bias is saying. And like I said, let me reiterate a bit, I said you can build bias from the weekly. If you build bias from the weekly, the daily has to confirm that direction of bias by doing two things, right? The daily has to confirm the directional bias by doing two things: sweep of liquidity and break of structure, or it has to engulf, right? If the daily engulfs, right, it doesn't sweep liquidity and break structure, but the daily engulfs, what you're going to see is that scale to one time frame lower, go to like a 4 hours time frame, right? You will see that this engulfing you're seeing on the daily is a liquidity sweep and a break of structure. So what it does is that the daily confirms the weekly directional bias that you have. So all you have to do is now you are subjecting this entry model to your directional bias, right? So, uh, okay, so let's continue, right? So, like I said, you can build bias using weekly. If you build bias on the weekly, the daily has to confirm. If you build bias on the daily, the 4 hours has to confirm, right? And the same way the daily confirms the weekly bias is the same way the 4 hours confirms the daily bias, right? The same way the 4 hours confirms the daily bias is the same way the 1 hour confirms, the 4 hours bias, right? So whichever one, if you are a type of person that you just want to be in and out like you were never there, right? Like it's slang that we use, right, with my guys, right? The moment your trade picks your entry and it goes like 1 to 4 straight or 1 to 3 and it hits your TP on the out, we always say that's in and out like I was never there. So if you're a type of person that you want to be like in and out like you were never there, 1 to 3, 1 to 4, and all of those things, right? You can build bias from the daily, you can build bias from the 4 hours, wait for 1 hour to give you a confirmation, and you're good, right? So one of the things I said is being able to understand how this model works, right? Everybody knows that this is a strong low, and the logic behind the strong low is that it must sweep liquidity and break structure, like, and then the B leg is what we call our inducement liquidity or internal range liquidity, which must always be resting above or below an imbalance that needs to be rebalanced or an order block that needs to be mitigated. The only logic that we have for the C leg here is that this C leg is going to serve as your what? Is going to serve as your external range liquidity, which is your target. So there's no proper like logic behind this C leg. It's just your external range liquidity that needs to be taken, right? So one of the things I was trying to say to us is that, let's say, for example, we are building bias on a weekly time frame, right? So let me just put this here, right? We're building bias on a weekly time frame. Let's say this is a weekly time frame and you have like an order block that price comes into, right? So one of the things I don't really do personally is when there's an order block that, let's say for example, we're using an order block now. I don't really pick the entire weekly order block, and I'm now expecting, people call it POI. People, I'm not trying to bash the way people look at the market. I'm just trying to tell you that, so that your chart doesn't look clustered, it doesn't look dirty, your chart looks clean. Right. So instead of me to pick the entire order block, I just pick a what I call specific price level that I want to see price run into. So what you see is that price runs into, for example, price comes into like an order block. Another thing you can also see that price can actually do is that on the weekly time frame, again, you can see that maybe price can run into a previous weekly high, right? Price runs into a previous weekly high. It runs into it like this, takes it out, then how the candle closes, it closes below. So we have what we call the previous weekly high candle sweep, right? So we have a liquidity sweep of a previous weekly high, right? So either you see your weekly time frame giving you something like this, either an order block or an imbalance, the price rebalance, then it closes below or above, or you see price take out the previous weekly high, right? After taking out the previous weekly high, sometimes, when you want to take out a previous weekly high, you will take it out to the full body. Or at the end of the day, when you wait for that weekly candle to close, it closes like this. For example, I call it a candle closure, right? So how this weekly candle closes really matters a lot, right? So when this candle takes out the previous weekly high and it closes below, it gives us an intel that price is likely just going to continue to sell the coming week, right? But how the candle closes is not enough to tell you that it's going to continue to sell. What you have to do is that you have to scale down to the daily time frame, right? You have to go to the daily time frame for daily to confirm this bias that you have here, this bias that you have here. right? You want to see daily do something, right? Because of how this weekly candle swept the previous weekly high, or because of how this daily, mitigated this particular weekly order block and closed below, right? You want to see the daily do something. You want to see the daily sweep liquidity and break structure. Sometimes one break of structure is okay, but it's always best when you have two structural points break. If the daily doesn't give to you this, right, the next thing you want to see the daily do for you is that you want to see the daily engulf. You want to see like an engulfing on the daily. So when you see this engulfing on the daily, it's justifies this directional bias that you have, the bearish bias that you have. Because when you scale down to the 4 hours time frame, one time frame lower, when you have this on the daily, you are going to see the 4 hours is going to give to you the liquidity sweep and all the break of structure you're looking for, right? So this is like the theory part of it. So if you go straight to, let's just go straight to the charts, right? So that we can just so that we can all understand what I'm trying to talk about. So if you look at this on the, okay, this is a trade that's something we called yesterday when we were looking at the charts yesterday. This is gold, and let me use, I don't want to take this. Okay, I have it saved already, right? I have this trade saved already. It's already saved already. So I'm just going to clear it out, right? So now, if you look at the weekly, let's build bias from the weekly time frame, right? Oh, I'm sorry, I'm sorry. So if you look at the weekly time frame, right, you see that you can see what we had here, like where we're actually coming from, right? Let's look at yesterday, and everybody who were on the call, those that were on the call yesterday night, you can see where we spoke about this, all of this buy that is happening on this weekly time frame. You can see where we spoke about it from. And one of the things I spoke about the origin of that particular cell, all of this cell that we have here, right? This is the origin of the particular cell. So one of the things I was trying to emphasize on is that this is supposed to be like a weekly order block, right? But it's going to be very crazy if you start picking the entire order block. Some people go as far as maybe just putting like 50% of the order block, which is not bad. Like I said, the caveat I said is I'm not bashing any trading system. I'm not here to do that. Right? I will never do that, right? So one of the things I said yesterday is, and also said on this call, is that instead of picking the entire order block, what I try to do is I pick specific pricing levels, right? Those specific pricing level, I call them V-shape and A-shape, right? They are V-shape and A-shape. They are key specific pricing level that when you study them, you see how price reacts from all of these areas. So you will see that the origin of this from the weekly time frame now, the origin for all of these sales that we have is from this. We move to the line chart, you can see this V-shape that we have here, right? So you can see how, go back to the magnet. So you can see how price came back to this key pricing level, right? How did this part, you can see what happened here. So this particular, another thing you would notice here is that this particular old weekly high, because this is a weekly time frame, which served as an inducement, right? This old weekly high that served as an inducement was resting above this particular key pricing level, that is the V shape. So what did price do? Price took out the previous weekly high and also came to play this key pricing level on this weekly time frame. So we pay attention more to the candle closure, right? How the candle closes really what really matters to us, right? You can see we took out this inducement liquidity, we came to play this key pricing level. Then this weekly candle just gave to us what we call like a close below, right? This is the closing price because this is a bullish candle. The closing price is just below all of this liquidity that was swept at this key pricing level that was played, right? So if you move down to the daily time frame, let's see how the daily confirmed all of this sell that we had. So you see that this high is, don't forget where we're coming from. This is the origin of all the sales that we had here, right? So you can see what I said to us here, right? That anytime you have that kind of candle closure weekly, the daily confirms the buyers by either sweeping liquidity and breaking structure, or you see like an engulfing. So you can see that the daily begins to confirm your weekly bias, like the bearish bias you have on the weekly. You can see what gold did. It swaps the previous daily high. The next thing you see here is an engulfing. You can see how we have this bearish candle engulfed. It's completely engulfed this particular bullish candle. So what did you notice about all of these sales that happened here, right? All of these sales that happened here. Can you see the same thing we had on the weekly time frame? If you don't forget where we had this, the weekly time frame, we had this particular previous weekly high that was swept, that served as an inducement liquidity just resting above this particular key pricing level, right? The same thing is what we have here again, on the daily time frame, right? You can see what we have here. The previous daily high served as an inducement liquidity that is also rested at the key pricing level of this daily time frame, right? So you will notice something again, how price took out. So I'm going to take out this weekly on, right? So that our chart is going to be very clean. So you can see how this previous daily high served as an inducement liquidity resting above this key pricing level. You know, you can, for people who love to, people say this is an entire order block, right? Instead of just marking out an entire order block, just mark out, keep it simple, mark out a key pricing level, either A-shaped or V-shaped on the higher time frame, and wait for price to just react from there. So you can see how the previous daily high acted as a inducement liquidity, price came, tap into this key pricing level, and you can see how it started to drop, right? Another thing you will see is that if you move to the line chart again, we pick another key pricing level again. You can see this one that looks like V shape. This one is A shape. This is a V shape. So you can see how we reacted from here. You can see how we sold. We got to this key pricing level again. We reacted from there. We had all of these buys, right? Before we now started to have all of these sales. So if you move down to this particular point, you can see how we have this key pricing level here again. You can see how price respected it a lot. Then we had all of these buys, right? So don't forget, we're not changing anything. We're just learning how to build bias from the weekly and using daily to confirm the bias. What we are going to do is that overall on the lower time frame, we are going to be using this entry model. We are going to be subjecting this entry model to what we have on the, from the directional bias that we have actually built, right? So that is just it. It's not so deep like that, like so deep. So now if we move back to the weekly, I'm just going to take all of this out. So if you come back to the weekly time frame, let's run a quick commentary on what happened on the weekly, right? So we know that this is the origin of the entire sales that we've been having before we start looking at this buy that happened today. So now let's look at what happened here, right? So you can see another thing you would notice on the weekly time frame, this is a fractal nature of the market to confirm all of these sales that we had all through the week. You can see what weekly did. This weekly candle actually engulfed this particular one, right? Which means because it engulfed, you will see that on the daily, we did something already, right? On the daily, you can see that because of that engulfing that happened on the weekly time frame, you can see how we broke structure. If you move to the line chart, the break of structure is going to be very clear. Structurally, we have this higher low, we have this higher high, higher low, we have this higher high, we have this break of structure, right? You can see how we broke structure there, right? So because of how the weekly time frame actually engulfed, right, you will see that on the daily time frame, daily confirm that engulfing by doing what's like breaking structure. So this is the entirety of all of these sales that we have, right? All of these sales that we now have for this week. So let's say, so let's look at this. So we always pay attention to all of this key pricing level. You can just take, instead of this taking this, let's take this, right? Because this is something I'm going to explain on its own, right? So let's say you're taking all of this order block that price is actually respecting. So you can see what I'm saying here, right? One of the things you will see here is how price came to mitigate this order block on the weekly time frame. And you can see how it's closed below, right? It gives to you an intel that price is going to be selling. And you can see we already have that intel already. We have, with how this was last week's candle, because of how it's closed, it's mitigated the order block, it closed below. And on the daily, we already have a break of structure, right? So it means that this coming week, we are going to be having more sales, right? If we are going to be having more sales, our first target is like overall is going to be this previous weekly low. Then we also have this key level already, which I made mention yesterday that we're going to get all of these buys that we have here. I told my guys that we're going to have all of these buys. So you can see how we have this V shape here and our price reappeared. We're having all of these buys, right? So these are key levels. So let's study what happened here. So if you subject everything to your entry window, right? So let's go to let's say we're starting with a 30 minutes time frame and we want to get an entry. You can see what price did in that particular order block, right? Look at this. On a Monday, so look at this, price came into that order block. We already have a break of structure on the daily time frame. So we already have the break of structure on the daily time frame. So look at what price did this new week that we have, right? This new week, you can see how we hold on, let me show you something. So look at this. This is the Asian session range. So you can see what we did here. We swept this particular Asian liquidity that is resting here, and the sweep of liquidity happened during London. So we had this Asian liquidity that was swept. But another thing you would notice is that, let me turn off this Asian liquidity. This Asian liquidity is also overlapping around this same, look at this as well. So you can see this, we had this liquidity sweep, we had this break of structure, we had this break of structure, we had this break of structure. So we broke more than one structural point, right? So because of the break of structure that we have in more than one structural point now, what I want to show to us is how this Asian high was actually overlapping with this key pricing level, the V-shaped again that I spoke about, right? So you can see how the Asian high is actually overlapping at that key pricing level. So what did you notice? We swept Asian high. If you move straight to the line chart again, you will see where we now have, this is the flexibility of the market. We have a liquidity sweep here, right? This was a liquidity sweep that we had here, and we had a break of structure. We broke two structural points here, right? So after breaking two structural points, after the liquidity sweep, it confirms our bearish bias. So did you notice anything? If you were going to be playing, a lot of us missed out on these sales, just only one person calls the sales, right? So this was the first sale that happened on Monday, and this trade activated at night, right? So if you were going to be playing this entire order block, right, you will see that price would have, depends on the broker you use, price would have missed your entry or anything. But one of the ways I also tell my guys to approach Quasimodo reversal level, that is the QMR level, is that you would see that this is the next QMR level that was disrespected, because one of the ideas behind QMR is that we're having higher highs, higher lows, higher highs, higher lows. This low is supposed to be respected, which means that this is supposed to give to us higher low and continue to move to the upside. Now, because this low was disrespected, the last high before the main high becomes your Quasimodo reversal level, right? So instead of picking the entire last up candle before the sell that led to the liquidity sweep as a Quasimodo reversal level, I always tell them to pick the specific price level. So if you pick the specific price level, that becomes your Quasimodo reversal. So you know what we have here. We have a sweep of Asian high. We have a break of two structural points here, right? You can see another thing you would notice is one of the ways you would have missed this trade is that another reason why I missed this trade on Monday was because there was no inducement liquidity. I wanted to see the inducement liquidity very close to this Quasimodo reversal level, that specific pricing level, or if I'm going to be playing this other block, right? So, but because this inducement liquidity is far from it, I didn't take it. So, but you will see how this alone from a weekly time frame, you can see how this guy confirmed this bias and just continue to sell, just continue to sell and continue to sell, right, all through that day. So what happened on, that was on Monday. So what happened on Wednesday? This was Wednesday's trade, which was yesterday, right? Wednesday's one was also very, very clear, right? One of us actually shared this, he caught it, right? So you would notice what happened on Wednesday, what happened there, right? You can see how we had a liquidity sweep again. Don't forget we have a bearish bias. So you know what people say, the trend is your friend, right? So we always want to trade in the direction of the weekly trend or the daily. So what did you notice here? We had a liquidity sweep, we broke two structural points again. And like I said, when you have to structural break, it makes a lot of sense, right? So you can see we broke two structural points. And I said to us that the A leg must satisfy two conditions, liquidity sweep and break of structure. And I said that the break of structure comes with a blueprint of that impulsive move to the upside, right? So one of the things you will notice is that we had the A leg here, we had this our A leg, we had this our B leg, we had this our C leg, right? You can see how this B leg was actually taken, right? So now this is the logic. This is where the analyst in you comes up, right? You see how this B leg was inducement liquidity, right? You can see how it was taken. But another thing we've noticed is that this low, which is our C leg, which is our external range liquidity, was not taken. We took out the B leg, but we didn't take out the C leg, right? So it tells us that this high that is being created because of this C leg that was not taken, this high becomes our new engineered internal liquidity or inducement liquidity, right? So you see how we took out this B leg again. We traded lower, but we could not come to still take out the ceiling. We know that all that is just happening from this high to this low, everything that is happening inside of it is just engineered liquidity. So what did the price do? Price came for this one as the B leg, right? Price came for this one as the B leg, and you can see how we took out the B leg and price just continued to sell on Wednesday. So now what I want to really talk about is I want to make a commentary of today's sales, of today's buy, all of this buy. Okay, let's talk about the sales a bit. Let's just talk about the sales a bit. The sales that happened in the morning, right? I took the sales that happened in the morning. So I was telling my friends, I was telling them that if you pay attention to how 4 hours actually is actually rejecting, I told them that pay attention to one of the things you will notice is that we have like this market inefficiency that is resting here. right? If you move to the line chart, pick this particular specific pricing level one. What I told them, I said, if you see the way 4 hours is actually rejecting, right? I want to see a 1 hour break, right? We want to see like a 1 hour break. So one of the things you will notice that happened for the sales that the first sales that happened, right? The first sales that happened, where is it? Was that we swept, I think we swept Asian high, and I said, let's go for Asian. Yeah, okay, good. I think it's clear already. So if you move to the 30 minutes time frame, so I wanted to see price tap into this particular 4 hours specific price level that is overlapping with this, with the imbalance that is actually resting there, right? So if you move to the line charts, right, you would see that you would see how we took out this Asian high, right? After taking out this Asian high, one of the things you will notice is that we actually swept this particular liquidity, right? So let me just make it a bit smaller. You will see how we swept that liquidity. So sweep of liquidity, break of structure, right? So the moment we swept this particular liquidity that is resting here, right, I began to look for sales, right? But I was looking for sales to take out this particular low. I was looking for sales to take out this low, which is I wanted to trade from Asian high to Asian low, and I was going to be done, right? Like that was going to, where the trade was going to collapse. But we took out this liquidity to the upside. We also took out this Asian high. So what informed my sell bias was this. This is what informed my sell bias. So you can see how we have this engulfing here, right? So because we are coming from the 4 hours and 30 minutes was what I used. The moment we had this engulfing on the 30 minutes, if you move to the 15 minutes, you will see we had a break of structure, right? If you move to the 15 minutes, 30 minutes engulfing, so we had the 15 minutes break of structure. Look at this. We had this 15 minutes. You can see this. You had this higher high, higher low, higher high. We had this break. You can see this break of structure here. So that was the break of structure I was paying attention to because of what happened on the 15 minutes. One of the things you will notice is that your trade is not going to be, the chart is not always going to be picture perfect. And because of how I love those specific pricing levels, instead of picking the entire order block, I'm playing this A shape, right? This was where we're going to be playing the A shape. So you can see how price, my stop loss is just going to be above the strong high, that high that took out liquidity. So you can see how this trade got activated, very close to stop loss, and price ran so well, right? Price ran so well. Let me, I hope I'm going to be able to pick my, it's taking time to load. Just hold on shoot. I shared my, I'm trying to bring out something for you guys to see. Yeah, so you see this. Can we still see my screen? This is not what I want to show. So hold on. I just want to show us, I want to show us something. It's really slow. So look at this. It's not. Let me paste something on this screen. It's not coming. Okay, so what I want to show to you is that my trade got activated here. It dropped. So the moment it got to this particular point, it was already close to a 1 to 4, right? But my TP was here, right? But this trade ended up to become a break even because I already went break even. I didn't take partials, right? So it's dropped, went back to break even. So it took me out, right? So this was the first sell that happened. So I mean, imagine you do like a proper 1 to 3. So 1 to 3, you were already in and out like you were never there. So, but let's pay attention to, the buys that we are currently having, right? The buys that we're currently having. Let me show us what is happening on that buy, right? So you can see on the buys that we have. So originally we know that like structure wise, this guy is bullish, right? Because we closed above this particular high as a with a body. We closed above this particular high as a body. So we know we are actually bullish, right? So because of what all of this retracement that is going to be happening here, right? We're just paying attention to the weekly bias. So yesterday night on the call, I told my guys, my friends, some things. I told them, pay attention to this weekly low. This old weekly low is going to serve as the next strong liquidity that price needs to take. And after price takes out a price weekly, previous weekly low, this specific pricing level is what we want to see price react from. So you can see how we tapped this previous weekly low, price reacted from this key pricing level, right? You can see the moment price reacted from this key pricing level, right? Now, what do you see? We're just waiting for to subject our entry model we want to subject our entry model to, the weekly bias that we have, right? So from where price is actually reacting from the weekly time frame, right? So this was a weekly low, the old weekly low that was actually taken. And don't forget, this was that key level that we are coming from on the weekly time frame. So what did you notice about 1 hour? What did the 1 hour time frame do? Right? You can see what the 1 hour time frame did. We swept liquidity here, right? We also broke structure. So 1 hour gave to us like a confirmation of that weekly bias already. That's okay, guys, we are ready to buy, right? So we are ready to buy. So this was when we had a break of structure. We had a break of structure here. So we had a break of structure. After having a break of structure, you can see where the entire trading model now formed. This was where the entire trading model formed, right? Number one, we had a liquidity sweep, which gives to us a strong low, right? So we have the A leg is being formed. The B leg, which serves our inducement liquidity, we have the C leg. The C leg is what is known as our external range liquidity. That is when we want to see price stick out, right? The B leg is what we call our inducement liquidity or our internal range liquidity. So now, one of the things, the reason why we were looking to buy below this inducement liquidity and the place we were looking to buy from, which was like very, very accurate, right? Like I said, the caveat is that there's no trading system that is immune to losses. Just understand how to build bias from weekly to daily, then subject the entire trading model that you know to your weekly or daily bias. So if you look at this, we have the conditions for the A leg, the B leg, the C leg. The B leg is our inducement liquidity, right? So I move to the line chart on the 1 hour time frame, and this is my key specific pricing level again, right? That looks like the V shape that is here, and I want to see price play out from, right? So, and one of the beautiful things is that it is very close to my inducement liquidity that is resting here, right? This is the inducement liquidity, which is the B leg. So what is the logic behind why we are actually buying? Why does it make a lot of sense? We came from a very key specific pricing level, right? That price reacted from on the weekly time frame. 1 hour actually now led to what? Liquidity sweep and break of structure. And after 1 hour led to liquidity sweep and break of structure. What do you see? What can you see here? What can you see that is happening here? Now our trading setup or model now begins to take formation, right? We swept liquidity, right? After sweeping liquidity, we broke above this high. So we have the A leg, B leg, C leg. So we know that price is going to come back. So you can see, imagine how price came. It felt like a knife, right? Came below this inducement liquidity, right? Came below that inducement liquidity. This is where we're going to be taking the buys from. So our first target is going to be the inducement, the external range liquidity. So from that point of entry to the external range liquidity is a 1 to 4. If you do a 1 to 5, this is a 1 to 5. If you do a 1 to 3 alone, just from the point of entry to this particular point of 1 to 3 is done, right? But if you see how price, because we're reacting from a weekly time frame, so we're expecting that the move is going to be really, really large, right? So you can see how we're currently running a 1 to 8, right? We're currently running a 1 to 8. So if you look at what we have, yeah, right? So we're currently running a 1 to 8. So this is the logic behind why we are actually buying, right? This is the logic behind why we are actually buying. Sweep of liquidity, ABC created a trap, which was an inducement liquidity. Price took out the inducement liquidity, came to our key specific pricing level, tapped into it, and price just continued to run, right? I was also looking at Solana USDT, right? On crypto, I did a call with one of my friends and community over the week, and I was telling them about Solana USDT. As at that time, price was here. Last week when I was talking to them, price was here. Okay, on Monday, yes, it was even on Monday, price was around this area, but I was telling them we can go short on Solana USDT because I mean you can also build if you study Solana USDT using what I just taught on building bias from the weekly to the daily and also to the 4 hours, you would notice everything that I spoke about here, right? So now, for example, let's move to the line chart. One of the things you can see on the line chart is that we had this lower low, we had this lower low, we had this higher low, higher high, higher low, right? We had this higher high. We broke two structural points. So the break of two structural points indicates for us that yes, the bias is going to be, we're going to be bearish, right? This becomes our next run liquidity, right? So this is like a market commentary. So I'm not going to go in depth on a number of things. So what did you notice for the trade formation, right? Look at this. Why I was telling them we're going to go short on Solana USDT, right? So you see this, we had a liquidity sweep. Don't forget, we swept this liquidity, but we are focusing on the current price action. We swept this liquidity, we broke this structural high low, but overall, we broke two major structural lows. You can see this low that was broken, right? So one of the things you will notice is, again, is that this is our QMR. This is our QMR level, right? And one of the things you can see that is resting above the QMR level is your inducement liquidity. That is actually resting above it. You can see how the inducement liquidity is resting very close to the QMR, right? So if you were planning to take the trade from this order block, if you are planning to take it from this other block, you are not wrong. Just that it's just going to be a missed trade, right? Because there are times that price will want to trade to the extreme before moving to your direction, right? But the reason why I told them we're going to play from this QMR was because the same idea like I shared on gold that happened on Monday, right? Price was giving to us higher high, higher low, higher high. It was supposed to respect this low, give to us higher low, and continue to move to the upside to give us a higher high. But what did you notice? Price disrespected this low. It gave to us higher low, higher high, disrespected it. So the moment this low was disrespected, the last high before the main high that was disrespected becomes your passive low reversal level. It becomes your QMR point. So instead of picking all of the candles there, right, we want to pick the specific price level because it's going to be resting either above or below the inducement liquidity. So you can see how it was very, very accurate. Like another thing I told them on that call, I think the video is on YouTube. If you watch it, the one for Monday, you would notice I said we want to move from this inducement liquidity down to this external range liquidity and so down, right? So you can see when we picked price from above the inducement liquidity, tapped into this QMR, and price just continued to just started to drop. I think uh, we've gone above going more than 1 to 3. So maybe if you're a very conservative person, you want to put your stop loss just above this high. But if you're a very aggressive person, you want to put it above that possible level reversal high, right? And currently, what is price doing? Price is at a 1 to 4, right? So if you are running this on crypto, this is like a 1 to 4. So this is the market commentary I wanted to run on gold, and I also wanted to run on what are they calling it? And Solana USDT, and I would have run on what do they call it now, on EU, right? A number of us took EU as well, right? I called out EU, and just a number of us took EU. So, but this is what has my interest because I trade more of gold and GBP USD, right? So yeah, so this is it. So we just have a few minutes. We just have a few minutes. We have about 3 more minutes left. We might want to take a number of questions, maybe just 1 or 2 questions. Okay, somebody said looking at the XAUUSD on the 4-hour time frame, we haven't broken. Okay, somebody said I took the GBP USD buy. Okay, so looking at the 4-hour time frame, we haven't broken major structure. Is there a possibility for sales tomorrow? Yes. And you know what I said? If you were on that call yesterday that I held, I told us that, overall, what the market is going to do for you is going to create like how a candle forms, right? Either daily or weekly, right? Once we have this, I think I learned this from ICT, every candle forms what we call open, high, low, close. So you can see when we opened on Monday, we created the open at the high. Monday gave to us like the high of the week. Then Tuesday, Wednesday, and Thursday Tuesday to Wednesday gave to us a sell. Then you can see what Thursday is doing. Thursday started to give to us that reversal, right? So maybe Friday can just, Thursday might just sell to a point, and after selling to a point, Friday will give to us that reversal, right? Friday will just give to us that reversal for a close, which is tomorrow. Tomorrow is Friday. So we might see that little reversal for a close, right? And no. So if we're going to be looking for another sales, right? So if we're going to be looking at the sales, if we're going to be seeing sales, yeah, sure, we can look for sales tomorrow. So one of the places I'm going to be looking for sales for me is that I'm going to be paying attention to this entire structure here, right? We have this A leg, we have this B leg, we have this C leg, right? That is resting here, right? So it makes a lot of sense to me right now if I'm going to be doing this, right? So this for me is going to serve as my inducement liquidity on the 4 hours. Don't forget this is a 4 hours time frame, right? You can see why the reason why we broke structure on the 1 hour was because 4 hours are engulfed, right? Just go over the video again. Over the weekend, we're still going to talk about building bias like properly, like an in-depth explanation, right? If I move to the line charts, this becomes like my key specific price level on the 4 hours that I want to pay attention to, right? So the beautiful thing is that that specific pricing level, you can see how we engulfed here, and this one is serving as an inducement. It's serving as an inducement, right? So if I'm going to be selling tomorrow, I want to see price take out this high, right, which is going to serve as inducement liquidity, and price is also going to react from there. Give to me like a 1 hour to 30 minutes break of structure and entry down, right? But I'm not expecting Friday to just give to like a sweet, like massive move like that, right? Because Friday is likely going to be very, very slow. But you can see how, for me, I'm going to be looking for sales, right? We have this major break here on the 4 hours, right? We have that major break. We broke this major low, right? And so this becomes the major high. I'm paying attention to liquidity sweep, right? Sweep of liquidity, break of structure, A, B, C, right? So I want to see price react above this, and want to continue to sell to the downside. So if we're going to continue to sell to the downside, this could be the next draw liquidity on maybe from next week or from next year, from next week. Yeah, you can use imbalance anymore. Don't worry, when we start over the weekend, this is just a market commentary, right? So when we start over the weekend, we talk about it, right? So you can look for sales at this particular level. Just be patient enough to wait for it. That's all you just need. The patience. So price comes to this point, gives to you your entry model ABC, take it down and just continue to sell to the downside. So guys, we have a few seconds left. Let's all have a wonderful night. See you over the weekend when we have a proper call and explain how to build buyer. Good night. The recording is going to be dropped and shared in the public Telegram channel and also for my guys as well. Good night, everybody. God bless you. See you on Saturday.